It seems the financial world is in major turmoil after the US Congress's failure to ratify their $800 billion rescue plan. With me is CEO of Home Track Australia, Brendan Darcy, and he's got some good news and some bad news. G'day, Brendan. Welcome to the show.
Thanks, Mark.
First of all, we're in better shape than the UK, aren't we?
Well, right now in the United Kingdom, there's a housing crisis and there's a financial crisis. We saw earlier this year the failure of a bank, Northern Rock, and recently last week, Bradford and Bingley failed as well. And we've also seen the forced takeover of HBOS, the UK's largest lender, by Lloyds TSB. House prices are down by 6.2% the year up to September. Volumes of housing transactions are actually down almost 80% on what they were a year ago. And the time to sell a property has almost doubled over the past year to over 11 weeks now. In a recent poll of 30 economists by Reuters, the average expectation for the house prices in the United Kingdom to fall from their peak was 20%.
So there's more pain to go, another 14%.
Yes, that's the forecast. In Australia, I wouldn't say that it's a crisis at this point, although there are some important parallels. We definitely have a credit crunch. Consumer confidence is at 17-year lows, and we have a restricted lending environment because of the credit crunch. We've had a very liquid securitisation market up until the middle of last year. A big part of that was the offshore markets. Now, the onshore markets are still open, but they're at 8-year lows. But the offshore markets, which a lot of the non-banks really heavily relied upon, have basically shut down. And that has a threefold impact. We have more expensive mortgages, we have less competition, less non-banks in the markets competing with the major lenders, and that means credit standards in the form of less choice, lower LVRs, more proof of income. Low documentation loans, for example, are now at a trickle compared to what they were a year ago. This next chart shows volume of mortgage transactions over the last few years. It compares Australia to the United Kingdom. What it shows is that the UK for purchases is off 80% compared to a year ago.
So what does that mean, 80%?
There are 80% fewer housing transactions in the United Kingdom as compared to a year ago. In Australia, the rough figure is about 20%. So Australia is off, but it's nowhere near at the crisis levels that you're seeing in the United Kingdom now.
So how does that compare to Australia?
A large percentage of the biggest drop-off postcodes are actually in WA. And this chart shows a cadastral map of Perth. Red and the green, by the way, are those postcodes that have seen very large 20, 30, 40, 50% falls in the number of housing transactions. You'll see that in the inner areas of Perth, that's where you've seen very large falls, and also in some of the outlying areas.
So how does that compare to, say, the more populous eastern states? Let's try Victoria.
In Victoria, this chart shows, for example, a cadastral map of Melbourne, and you'll see that even in Melbourne, which is performing relatively well in terms of the number of housing transactions, you can see in the inner Bayside suburbs, for example, parts of the inner west, where there has been a dramatic drop-off. And interestingly, they are areas where there was a lot of activity a year ago.
After the break, we find out what the future holds for Australian property, according to Home Track CEO Brendan Darcy.